This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Patrick, let's move on to our post-game chart book. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, it means you're not yet registered at macrovoices.com. Just go to our homepage and look for the red button above Art Berman's picture that says Looking for the Downloads. Patrick, can 2021 get crazier than 2020? I say yes.
Eric, it is definitely a crazy start to the year, and we got full momentum in so many of the kind of bubblish stocks. I want to start off here on page 2, just the S&P 500, which doesn't really feel too much like a bubble. I mean, it's slowly crawling higher, but I don't think it's the major components of the S&P 500 that are taking so much of the money flow. But with this breakout on the S&P 500 to a higher high, I mean, the most immediate coming week or two could see us finishing off moves towards even 4,000 on the upside. Certainly, we are long overdue for some sort of a consolidation or correction of this huge rally that's happened since March. But it's probably on the short term likely to first go a little bit higher before we start looking for the next kind of swing high in this market. But what I want to really touch on is taking a look under the hood for what the different stocks or sectors within the markets are actually doing. And what I've continued to find fascinating is on page 3 that we have finally seen a true rotation and outperformance of the Russell small caps over that of the Nasdaq technology. And maybe the rising yields is playing into that as we are seeing a bit of that rotation and the cyclicals doing very well. But really a trend that's been in place very much so over the last 3+ years has been that Nasdaq and technology outperformance. And it really seems now that you can find a lot of that performance in a much broader base of securities outside of those darling tech names that have truly been the rock stars over the last year or two. But what's also interesting is looking at what are the bubble stocks in page 4. And what's amazing is that, you know, we have Tesla here approaching $800, making Elon Musk the richest man in the world, and making Tesla, if I did the math right, have a market cap greater than the next 11 largest car companies combined. We really have this froth in parabolic rise, but you can see in orange when we're looking at that Tesla, really Bitcoin has been playing catch up in terms of percentage gains on the upside. Both of them now approaching 600% off of their March lows. And so it's going to be really interesting to see who wins this race for ultimately where we see some sort of a short to intermediate high. But certainly Bitcoin at this moment has really gained the accelerated parabolic rise element that may actually shoot it past Tesla. It'll be really interesting to see.
Yeah, to me, it's very interesting to see that the biggest performing names anywhere in finance are both things which, frankly, I respect the prerogative of other people who have different opinions, but at least some of us hold the opinion that neither one of them has any value whatsoever. And, clearly the momentum is there. The story is there. People love the story behind both of them. Whether or not it really makes sense for Tesla to be worth more than car manufacturers that actually manufacture lots of cars, all of them combined. It just blows my mind. In any event, let's move on to the U.S. dollar. We're coming back down into that key support zone where, boy, if that doesn't hold, look out below.
Well, sure. But, I think that at minimum, the first go around, we're going to find support along those lows. There might be a much bigger picture trend in play that will see the dollar index still break lower. But a number of these little measured moves are coming into this key support line. But the interesting part is I'm using the commitment of traders reports, the commercial dealers versus speculators. And I know that in the currency markets that it's a little trickier to use COT reports. But it kind of gives a bigger idea of the the sentiment, which is that generally everyone is quite bearish the dollar here. And while that in itself doesn't give a fundamental catalyst for a turn, it certainly offers a liquidity-driven short squeeze potential that once we reach this support, if there's any reversal in this, a short squeeze could quickly drive a counter trend, a very sharp counter trend move that may have no fundamental backing behind it. And so it'll be really interesting to see along the support line in the coming weeks whether or not it holds and a reversal emerges off of here.
Moving on to page 6, Patrick, boy, look at that. We're above the $50 line on crude oil, and that's where we were exactly at $50 on February 1st when, well, MacroVoices listeners knew that a global pandemic was coming because we told you on January 30th, but most of the world wasn't paying attention yet, certainly wasn't being priced into markets. We're above that number now.
Oh, that's for sure. And, the one thing that I'm going to be watching in the next week is whether or not this is a false start. Now, I don't necessarily want to make that call today, but if we found ourselves quickly back below $48 in the coming week, then I would consider that to be at least where we could run out of some short-term momentum, but that would have to be only after the fact. With a breakout like this, typically what you would see is the follow-through target those previous highs. And so barring some immediate reversal, which would have to happen in the next couple of trading sessions, I think oil following through toward those December and February highs up along that 54 to 56 range are entirely on the table here. But moving on, though, what I wanted to really talk about was some of these other commodities, and particularly that kind of parabolic rises that we're seeing in Bitcoin and in Tesla are not alone in their in that EV space and in the crypto space. What's amazing is that while copper is breaking to higher highs, we're really seeing, if we go to page 8, some true parabolic rises developing in the copper miners. And we're seeing just these parabolic rises in everything from Freeport McMoran to Southern Copper or Ivanhoe Mines or any of these other plays that are just running to the upside. And it'll be really interesting to see whether or not all of these markets reach their short-term swing high peaks in a similar window of time. It's funny that it's all happening at the same time, but another example of that is on page 9, that Northshore Uranium mining ETF. See the miners just starting to really run on the upside. It seems to be that there's this big acceleration in so many commodities, ag stocks, everything from the beans to corn and all the other types of commodities are just running on the upside. And it's really feeding that inflation or reflation narrative, at least it has been for the last month or so.
Well, I don't know. You could look at that the other way and say this entire move up on URNM is because they chose to advertise on MacroVoices in the fourth quarter and drove the entire market for uranium higher. I'm sure that was it.
I'm sure it was.
No, I think it actually had something to do with the United States government declaring a strategic uranium reserve in addition to the strategic petroleum reserve. Let's move on to government bonds on page 10.
Right, and this is just where I wanted to just touch on the fact that we had a considerable overhead resistance at the 1% yield level on the 10-year Treasury bond, and at the start of this year, we had a clear breakout of it. We're now trading at 1.08% on the upside. But what's particularly interesting is that it was an outright breakout on a whole number of the steepener trades. I particularly highlighted the 2s, 10s, which we had an inverted curve for a little while back in August of 2019, and we now are clearly seeing this new uptrend emergent on this, and that's whether you're looking at the 5s, 30s, or any of the other ones. Obviously, this is all a bear steepening based upon inflation expectations rising, which I think the commodity rally is obviously playing a key precipitating role in driving that. But that's where on page 12 we can really see that breakout on inflation expectations. This Proshares ETF that I have here is anchored off of the 30-year break-evens, and so you have a clear breakout happening here, and it'll be really interesting to see with a breakout like this, how far does it go? I mean, are we going to see now finally Treasury bonds and yields pressing back into those ranges. Like if, for instance, using crude oil as an example, crude oil is almost back to its highs from the start of the year in the pre-COVID period, and yet yields have not gotten nowhere near their highs, which were somewhere just a stone's throw away from 2% back then. I mean, are we about to see the yields get to like 1.5+% on this impulse? It'll be really interesting because those bonds have been quite boring, and there's been a lot of bond bears waiting for this break, and so it'll be really interesting to see if in the coming weeks this continues to follow through.
Well, and of course, we have interviewed some very, very smart people like Mike Green and Dr. Lacey Hunt, who still see deflation as the name of the day. But boy, as I look at charts like this, I really think inflation and certainly commodities are the place to be. I want to make sure before we close, Patrick, that we hook our listeners up with the webinar that you did over the holidays that was about trading the commodity cycle. If they missed it, can we still get it on the website? And if so, where do we find it?
Right. So we did over the holidays that Tactically Trading the Commodity Cycle webinar, and the recording is still available in the member section. So if you didn't have a chance to sign up and watch it and are still interested in watching it, the recording is on the site. You just have to sign up for a free trial at bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the Internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.